Hello and welcome to ET Market Smart Talk. Well, my name is Shita Janand, and we're talking about the Indian real estate sector, which has seen a steady flow of capital even amid global uncertainty. Now, with strong interest across asset classes and the cities. Well, to decode the latest trends in capital raising, deal activity, and absorption supply dynamics, we are joined by Vijay Agrawal, who's a managing director and sector lead infrastructure at Equirus Capital. Vijay, thank you for joining us.
Thanks, Chitij, for inviting me for this wonderful session.
Thank you so much for taking the time out, Vijay. And so let me just quickly, understand from you is how much capital has the Indian real estate sector has sort of raised in the first 9 months of FY26, and how many deals does this represent?
So, see, I think total capital raise, because see, there are a lot of the structured credit deals which are not being reported, but my estimate is around 11 billion to 14 billion range is the
Okay.
capital raised in CY25, basically. And this includes your private market deals, where
Hmm.
we are seeing a good activity. See, now the funds are creating a partnership model. Like if
Yeah.
you see HDFC Capital has announced a partnership with multiple funds, where they are
Hmm.
investing in the land stage and
Hmm.
then sharing the upside revenue share, or it can be a DM model, can be anything basically, depending on that. And like
Hmm.
Godrej and other people have floated their own AIF, and there are other
Yeah.
developers who are interacting with me. Can you help me
Hmm.
in raising the AIF for where I can use that money for a land stage?
Ah,
But we are seeing that, and another trend which has come up is a good is that, see, you have this uh, rental yield or what we call as a yield assets.
sure.
Now, earlier it was a game of big boys like a GIC, Temasek,
Hmm.
or like in Capitaland. Now you have entered, there are entry of the local
Hmm.
wealth managers like
Sure.
Neo, 361,
Hmm.
EAAA advisors. You will be surprised like EAAA has bought a strata from Embassy. So there were some two
Hmm.
or three floors in Manyata Tech Park which were
Okay.
strata. So EAAA bought that.
Uh-huh.
Brookfield sold large assets to 361.
Okay. Okay.
Okay. And we are seeing emergence of this type of deals
Hmm.
in the market. If you say a
Right.
prop share or a strata, say, these are like this.
Hmm.
Now,
Hmm.
people are moving towards AIF rather than doing a strata now. And
Right.
AIF are investing in these assets where they are
Hmm.
leveraging a debt and equity both and able to generate. And these people are promising 15-16% return to their investors.
Right. Right.
It's a fantastic thing. So you will
Uh-huh.
see a more capital coming in this market from that perspective. And I think in between 5 years, there was a dull for the P investment in the sector.
Hmm.
Now I'm seeing a return of that investment, and two sectors are very hot. One is the office property
Ops.
and
Okay.
warehousing. These two
Okay.
have really attracting the large capital in the sector.
Hmm.
And residential, which was completely no, now it has started also seeing the capital. And another
Yeah.
one is a hotel, which is a
Ah,
sector like you see a Blackstone doing three deals in back to back in 3 months' time.
exactly. Yes. Yes.
Warburg is investing in a platform with Lemon Tree, where asset
Uh,
platform they had demerged into a step down subsidiary where Warburg has invested.
hmm.
We are seeing a good different type of activity in the market.
Right. Absolutely interesting times for the Indian real estate sector here, in 2025, and I'm sure the interesting times will continue in the 2026 year as well. So let's quickly get on to some comparison as well. So how does the number of capital market deals in the first 9 months of FY26 compare, let's say, to that of the total number of deals that was seen in the entire FY25?
So see, I think FY26 still we consider this is a dull market. It has surpassed the
Okay.
FY25 numbers. I'll tell
Hmm.
you, there was always a dullness for a real estate sector deals.
Okay.
FY25 was an opening of that, and I think around 15,000 crores roughly the
Hmm.
capital was raised in FY25. But
Sure.
FY26 till 9 months, you had already 11 deals. and the
Hmm.
capital raise is 17,867. The major
Okay.
namesake deals are like you have a Brookfield
Hmm.
REIT doing a QIP, you have a Satwa, basically a REIT listing,
Okay.
and like
Okay.
then you have a Brigade Hospitality listing,
Hmm.
Marathon's QIP. So we had
Okay.
seen a good traction in the public market from the for the real estate sector.
Absolutely. And in the first half of 2025, which asset class was the most preferred for investment, and what percentage of the share did it hold?
So you can say majority was a see it was a difference. This time it was a mix. So you will have office. I think it should be around 50% is a office because see
Okay.
Satwa rate and a Brookfield QIP was majorly office assets. Then you had
Mm-hmm.
a IPO of office. Again, you can call it in this sector, but I would did not call it as an office asset ownership because see, it's an asset light model. They are
Mm.
a pure play operator. They are leasing the asset and managing the offices. See, now new
Sure.
trend which we are seeing is a managed office space where the office,
Okay.
IndiCube, and WeWork, they are entering into that field. And you will be
Mm.
surprised, Shitej, 21% of the office space absorption is by these co-working players in the
Ah,
CY25. It's
okay.
a big number. GCC is 24%.
Ah,
So what is happening? A new trend which is emerging is a corporates. What they are saying, my core area is not managing property. Okay,
right.
what they are giving to these people, they are saying you manage my office, you manage my IT, you manage my
Mm.
hospitality, everything. My people will come and they will go. So
Okay.
I don't
That's right.
want to keep any admin staff there. And this
Mm-hmm.
is a big trend which is emerging on this side. And this is also visible in the
Mm.
lease share also.
Appreciate that. Absolutely. Interesting point there, Vijay. And in fact, if we look back at the data as well, from the year 2022 to 24, has residential real estate absorption generally exceeded or fallen short of supply?
Yes, you're right. So I think at one point of time you had a 4 years inventory.
Mm.
Now your inventory is around 18 months. You will
Oh,
be
okay.
surprised Bombay market and Calcutta market.
Mhm.
Units sold are more than unit delivered.
Oh, okay.
Yeah, so
Very nice.
supply is short of the sale
Right.
in these two markets. Other markets are more or less neck to neck. You will see a 5% difference between the
Mm-hmm.
launches and sold inventory, the delivered
Mm.
inventory and a sold inventory.
Okay. Okay. Very nice.
One thing,
And
Hyderabad market, I think, is going towards oversupply, but there are
okay.
many projects have been slowed down,
Hmm.
uh, and so that's a thing on the
Right.
supply side.
And now that we're talking about different cities, so let me also pick your brains on that. Is which of these top seven cities witnessed the highest volume of sales and launches in 2025 calendar year, 2024 calendar year?
See, if I say a value wise, Bombay was the highest.
I'm
Let's
sure,
be
right?
very practical.
Yes, yes, I'm sure. Yes.
So it will be a 59,000 units in Bombay, but that value will be like 59%.
Sure.
Delhi and Bombay, they account for around 59% of total sales in the country. Last year,
Mm.
you will have a 6 lakh crore sales,
Okay.
and number of units you had surpassed. But biggest thing
Mm.
what you're seeing is affordable, the share is coming down.
Okay.
50 to 80 lakhs, there's no developer who is present in that market. See, if we talk about this top seven cities, the land and construction costs have gone up.
Mm.
Every apartment is above 1 crore. So it is not
Right.
fitting into that definition. You will
Mm.
have a 1 to 3 crores, okay,
Mm.
which we used to mid budget, you can call them.
Right.
Mid premium is 3 to 10 crores, and 10 crores and above is a luxury. And you will
Luxury.
be
Okay.
surprised 70% luxury apartment, 70% growth. The value wise, if I see why we had crossed, because the share of the luxury is more.
Luxury. Mm. Absolutely.
Luxury and
And
mid premium. Affordable
luxury.
has gone down by 25%.
Okay. No, very nice, interesting themes that are picking up, and I'm sure probably in the years to come the trend will only increase from here on, and we'll see more branded residences, luxury
Yeah,
estate
one,
sort of
yes,
coming.
Chitish, I think I should add that point is that overall market has not grown
Mm,
in the real estate, but
mm,
listed developers market share is increasing by
okay.
unlisted players. There may
Mm,
be some pockets you will have a very strong local brand, they are surviving, but smaller players, they are dying.
they're not okay.
They are dying basically. You can say that the sales are shifting from them. See, today if you are a
Yeah,
buyer or I am buyer, I'll prefer a branded name than a unknown name.
exactly. Yeah.
Or if it is an unknown name, I will go on delivery. If it is a ready
Mm,
apartment, I like, I pay and take the. I will not do the bookings.
booking.
And you're seeing a new trend which is happening is that
Mm.
the local players doing a JV with the listed players.
Listed place. Yes.
So
Yes.
see, Hyderabad, you will see a Vaishnavi
Mm.
doing a JV with the Prestige. They had launched around three
Ah,
projects. Okay,
right.
Vaishnavi was not that big name, but they had a land bank. They had a
Ah,
vision to launch big projects. Like one
mm.
project was 60 acres they had launched.
Okay. Wow.
So it's a such massive project. They can't sell on their own. So
Mm, mm,
they had done the JV. We have seen the DB Reality doing a JV with
mm,
Prestige
mm,
in Bombay market. So this is a new trend which is also emerging.
mm. Absolutely. So probably more consolidation that is happening in the industry as well, and
Yes.
new ways of
Rather
tapping
than
the market.
merger and acquisition, it's a project level consolidation which is happening.
Right. Right. Absolutely. And which cities did sales sort of significantly exceed the number of new launches last year, potentially indicating a lowering of inventory?
So lowering new launches, Bangalore, Hyderabad, Bombay,
Hmm.
and NCR. I think
Okay.
these four
Okay.
markets were very vibrant in terms of new launches.
Uh,
And even uh, Bombay market, the sales were more than the launches
mm,
basically. So that's a trend we had seen. People were always questioning ki whether 20 crores flat will be sold in Bombay market. Now there is no supply
yeah.
available in that. The project is being launched.
Uh,
The DLF recent project, 1,000
uh,
crores sale in one day.
Freedom one day.
Lokhandwala,
Yeah.
he launched the project 3,000 crores sales in 15 days. What are
Right.
we talking of? And that delivery is also not 30 and 2030 onwards the delivery. And
Mm,
people are ready to
mm.
wait for these projects.
Absolutely. Well, on that note, very insightful, Vijay sir. Thank you for breaking down the capital raising trends and the on-ground real estate dynamics for us. Thank you so much for taking the time out, Vijay.
Thanks, Kshitij, for inviting me. Thank you.
Thank you.